Tesla or NIO as a play on the China EV market?
That's fantastic. I think that's a great question. I think NIO has just upgraded it no more. I think $104 price target-ish. I think the market cap right now is more, I think GM has a $75 billion market cap. I think NIO's north of $80 billion. Ford's probably half of that. I can't believe I'm about to say this, but I think it is NIO. I think the optionality and the more beta is probably in NIO at these levels. So despite the fact that I do like Tesla, in the would you rather game, which I play better than almost anybody, I think it's NIO.
I'm just looking at our current trade ranges on that. It's a 2-to-1, which is higher than Tesla. So, if you're just going to be trading it, which I think it's if you would rather, right? Because would you rather make money or less money? I'd rather make more money. I'd buy NIO because it is better in terms of the momentum of the stock and the asymmetry from here.
Welcome back, friends, for one more update from the world of EV stocks. In case you're new to this channel, please do consider subscribing. And if you live in the United States, you can get 2 free shares worth up to $1,850 just by following the link in the description. Now enjoy the rest of the video.
They have an all-of-society approach to winning and dominating the electric vehicle market globally.
In 2020, EV sales in the US were far below Europe and China. Out of the 3.24 million electric cars sold, only 328,000 were in the US. 1.33 million were sold in China, and 1.39 million were sold in Europe. Let's take a look at how China came to control the market. The country decided over a decade ago that it wanted to be the world leader in electric cars.
The EV industry in China is one that has been very interesting to me because it's an example of how government policy can potentially drive innovation in an industry.
In an effort to support the adoption of EVs, the Chinese government has played a massive role. It has spent tens of billions of dollars to support the sales of electric vehicles. China has subsidies and incentives that benefit automakers, suppliers, and consumers.
There's no question that all of this move to electrics globally would not have really gotten traction without China first mandating that electrics would be part of its future. And as the largest vehicle market in the world, that has a global impact.
Besides subsidies, China's government also provides support in battery manufacturing and the supply chain. It's the leading producer of electric batteries and motors. China also made charging a national priority and has been installing an extensive network throughout the country. It has over 500,000 charging points, compared to the US that has roughly 100,000. China sold roughly 1 million more EVs in 2020 than the US. With less aggressive subsidies and lack of battery manufacturing, the United States has its work cut out for it if it wants to catch up. But there are also notable luxury brands popping up to compete with Tesla. They include NIO, XPeng, and Li Auto. All 3 companies have seen high valuations in the past year.
The all those startup companies are extremely well funded and welcome on Wall Street and global capital markets. It's the wide open, capital market, and it's the rich valuation makes the entrepreneurs believe that it is a worthwhile effort to try, even though the outcome can be binary, but they still think it's attractive.
President Joe Biden has unveiled an aggressive infrastructure plan. The plan is meant to transform most of America's cars on the roads to electric or new energy vehicles. The federal government will spend billions of dollars over the next few years to help create a vast network of EV charging stations and also give out cash incentives to buyers of electric vehicles. This is fantastic news at last for all the EV stocks. Both Tesla and NIO beat street estimates with record Q1 deliveries in 2021, and this now just sets up the rest of the year for a fresh and massive bull run in these stocks. While we believe Tesla stock could well move up by 50% from the current levels, the prospects look even better for NIO. The NIO stock has corrected a lot, in spite of only having positive stories coming in from China, and it is now only inevitable that the stock sees a significant move upwards again. NIO is more than just a car company, which we think is what differentiates them from most of the other electric vehicle companies, and we think their most valuable venture is their battery as a service model. It may be difficult for investors to see that right now, but in the long term, battery as a service could well be NIO's cash-making machine. It's got great benefits to every party. NIO gets revenue coming in forever, and then it also makes the barrier to buy a NIO vehicle substantially cheaper since the customer isn't actually buying a whole battery with the car. From our latest reports, the adoption of this model amongst new customers is growing rapidly in China. NIO's battery swapping technology is also hailed as a major technological achievement in the field. With the latest battery swap stations, NIO customers are now able to swap their batteries completely autonomously in under 3 minutes. NIO is looking good to have a positive run this week, and if we look at the technical charts, the next resistance is at around $45 for the stock. We are positive NIO can easily break the resistance if the current momentum in the EV stocks continue. And if NIO breaks the $45 mark, the next resistance is at around the $53 level. Many analysts are now extremely bullish on the entire EV space, and though all EV companies cannot succeed at the same time, we do see both Tesla and NIO as clear winners in any scenario. The recent crash in the NIO stock, which has been entirely due to the crash in general growth stocks, represents a once-in-a-lifetime opportunity for investors. Growth in NIO as a company is one of the easiest to predict right now. NIO will almost certainly grow by close to 100% year-on-year, for each year for at least the next 5 years. This is only the start of the S-curve, and the main 10x growth in companies like NIO is still in front of us, and not behind us. So, although this is not a financial advice, we believe the smart thing to do right now is to simply accumulate the NIO stock as much as possible, and hold it for the next 5 years. Thanks for watching this video. And if you are from the United States, please don't forget the sign up link in the description of this video to get your 2 free stocks worth up to $1,850 by depositing just $100. This is a limited time offer from WeBull, and you need to deposit the $100 before the end of this month.